Hi everyone, we're at the Baker Street property meet today. We're going to be seeing Ranjan and Co downstairs and Andrew Roberts, who will give us always an exclusive on the content and all the valuable information. So let's look at it and hopefully we get the whole show rolling.
Share with you what's happening and to set yourself up for 2024. Because 2024.
Right, after the amazing presentation this gentleman just did, Andrew Roberts, here at the Baker Street property meet, and now we're going to get insight for the LinkedIn and the rest of the social media family. Andrew, thank you as always. Amazing presentation you did. You covered so much, so I'm going to try breaking it down because much value. I'll try my best. I'm sure Andrew will give insight more. First of all, you mentioned about the finance aspect. What's happening? Because people need money, or somewhere money, from banks and loan institutions. What's your update? Give an insight to the LinkedIn family on that.
In summary, interest rates are going to be rising. I evidenced the 6 reasons why they are going to rise before the end of the year. The fact that the banks are having more bad debts and more provisions for bad debts. Interestingly, bridging lenders and development finance lenders are seeing arrears go through the roof and repossessions go through the roof. So what we're seeing is different parts of the finance sector struggling at different rates.
I want to just add to this because we had a little piece on Barclays Bank recently and many people watched that. It went viral. And the reason why it went viral is people don't understand what the bank institutions are doing, and we're both from the banking background, so we understand there is a credit crunch happening. It just hasn't been communicated that well. And one of the reasons is that means less credit. Therefore, they're going to have higher cost. And this is what Andrew has summarized nicely, because he's looked at what the funding is now, in 10 years, 5 years, 20, 30, in different order there. And the reason why he's done that is because you need to know how you get your financing at what term, depending on your strategy. Amazing. The other bit I want to touch on, because Andrew raised the opportunities. I love that. You mentioned a few. Can you give us a couple of big tips for the social media family?
Well, I'll start with one, and next month if you come to the Baker Street property meet, 29th of November, we have Andrew Binstock.
Wow.
Andrew Binstock is the auctioneer from Auction House. He is also one of the critics, analysts on the Homes Under the Hammer TV show. So he's a big name in the auction field. We've got him here. Now, a big one is auctions. The auctioneers are telling us in the commercial marketplace they're selling around 60%, in the residential marketplace around 70%. But what we know is when we track the data down to individual sales, they're only selling around 36% in the room. The rest of it is predominantly post-auction sales. What we also know, but is not published in the data, is that of the lots that have gone under the hammer and sold, around 5% of buyers are pulling out of that transaction after the hammer has fallen. So they're losing their deposit because they cannot get the finance.
I've got a huge other area which Andrew mentioned, and I've also seen this dealing with a lot of property entrepreneurs, is a lot of receivership, i.e. where the bank is taking back because the financing costs that were borrowed were highly leveraged, and that's coming big in auctions, and you mentioned this. What do you reckon the percentage of receivership properties in the auctions is right now? Have you got a stat on that?
In the residential, it's a lot lower, but in the commercial auction space, I would estimate, based on what I see, and this is what I see because there's no published data on this, it's around 30 to 40% is under receivership.
Wow.
Now what's interesting is they're repossessing for a number of reasons, and we've touched on this tonight in the audience Q&A about developers who've bought sites and now can't afford to build out. So that's one of the reasons developers are struggling, because build costs have gone up
rapidly.
So they're not able to build out. The second thing is the interest rates rising. When they got into deals, they based it on a certain interest rate. It's gone up, so it's now not making sense. And thirdly, when they're trying to come out of deals, their estimated GDVs are a lot lower. but also their costs have been higher and the finance is higher, so they can't exit without leaving most or all of their own money in, because they did deals on very, very low margins.
I want to just add to Andrew gave another huge value. Thank you, Andrew. One of the things that Andrew mentioned, and I've also seen this, is people had different periods of financing. So if I bought a property 2 or 3 years ago and I'm coming to refinance, I'm coming in a total different market because
Absolutely.
finance costs are going up. So therefore the deal is not going to happen. That is
It's
where
300% higher.
and that's going to push that 30% ratio that Andrew mentioned about receivers is going up, isn't it?
Absolutely.
So this is where the opportunity is. Andrew, we love this stuff. Thank you
Well,
so
thank
much.
you, Z,
really
once
appreciate
again.
it.
Really appreciate being here, and I hope that's given you great value. If it's given you great value, jump on down to the Baker Street propertymeet.com. 29th of November, Andrew Binstock is here sharing the insider's tips from the auction house.
You'll notice across social media, Andrew and Ranjan, more Andrew. Ranjan, I love what he's saying that, comments on these. So if you need any details or comments on there, because a lot of people come to me, ask me about how do you get Baker Street Property Meet. Andrew always puts that in the links, and we definitely are happy with that. And it's trying to make sure entrepreneurs get educated. Just have a look how many there is. Do you want to do a little swell quickly? Right, this is RAMs, this is property investors, property developers getting up-to-date market info. That's why I turn up, and I love the people presenting. So thank you so much, Andrew.
Z, thanks a lot. Keep the great content coming.
Right, one of the main parts of the event, which I love, is speaking to Ranjan. We had the conversation with Andrew, who gave the unbelievable financial update.
What
But
did he
today,
say? What did he say?
He gave a huge amount about the financials. We summarised because he gave so much value. It's hard to gather it all. But today, Ranjan, I don't know what he's been having, because he stepped up a few notches in my sense today, because you gave huge amount of value about the new PD
Was
rights.
it a notch above Andrew, or?
I'm not going to get into that because I get in trouble. I get Andrew Roberts sending me a message saying you said favourable stuff to Ranjan and vice versa. For me, these guys do an unbelievable show. We're privileged that they give us insight to help you, the LinkedIn family, and all the rest of the social media family with the insights. Ranjan, the PD rides on steroids. Oh my
exciting,
God,
very exciting.
so exciting. What is your top two, because there's so many, that you want to be doing in the new year, because you reckon they're coming in January, February?
They have to come in January.
Love it.
There's an election coming. They have to encourage new home building. Developers don't want to build in fields from the ground up. Existing defunct buildings are the game. I think, to summarize, I talked a lot about all the opportunities, but I think conservation areas.
Conservation.
Because if you think about it, we are not changing the external envelope of the building. So what's wrong with changing the internal use of a building in a conservation area? That's the biggest change.
Just to recap, for people who don't know, conservation areas is in built-up areas like town centres. I hope I'm saying it right, because it'll set me right.
Yeah.
Is built-up areas where you haven't historically been able to, or easily get permission at the bottom, depending if they're on the first or second parade. And there's been different adjustments. But now they've head up, because it's making, as you raised quite clearly, low-cost places. No one's getting the properties. They're just standing there, aren't they? So up north now may be a good place to invest.
2024 is going to be amazing. Because these PD rights are firmly on steroids, and they're coming in January, February next year.
And as Ranjan says so much, and I've been fortunate to have some time with Ranjan, who gives me a lot of insight around property strategies, so we can help the social media family. He's stated, invest in knowledge, obviously, but make first movers.
First mover advantage.
That's
is
it. That's it.
Early bird catches the worm.
And that's what you've done historically, and you give them loads of value.
Absolutely,
Because
that's the thing.
they don't know everything initially, and therefore you can make sure you benefit by making sure you take advantage of the PD. And therefore the commercial area is quite big as well, potentially.
Phenomenal.
Yeah, 1,500 to 3,000 square meters.
All
All abolished.
Which is, we said that together. You
I love
listen,
it. I listen to everything, because ultimately we want to make sure that entrepreneur does the property investment journey or property development, and this is why we come to events like this, because it accelerates your learning.
Well, Baker Street, it's a full house again, and we meet on the next meeting is Wednesday, 29th of November. That'll be another full house because we're looking at property auctions, which is the barometer of the property market, and we've got one of the leading property auctioneers joining us, Andrew Binstock from Homes Under the Hammer. So 29th of November is really going to be the place to understand what is happening in 2024 and how you're going to profit.
On that last note, and I've no ranger's busy, got 50 million people to see, is one of the things is auctions do scare people. Many people, because they haven't got the knowledge or the confidence, and this is a good way to start to build up that knowledge and try to take advantage, because historically I sort of changed my philosophy now. We used to say cash is king or queen. I actually believe content is king or queen because it makes cash, but ultimately when you go and buy property you need the money in the bank, and this is the place, isn't it? Auctions, right?
Well, if you find the deal, the money will find you. The question is finding the deal.
Yeah.
And what we've got at our next Baker Street, 29th of November, is Andrew Binstock. He's an actual auctioneer of 25 years.
Wow.
He's the most, he's the auctioneer that's appeared most on Homes Under the Hammer, the BBC One TV show. And what I've persuaded him to do is share with us the insider tips and secrets on how you can actually use auctions to grab yourself a recession bargain.
So he does residential and commercial properties, everything
All
that goes
sorts,
auction.
of course.
Love it, because as I always say, king of commercial property, this is the time, and this is the strategy me and many others are looking at and trying to implement or implementing in their journey, because the capital appreciation or the forced capital appreciation. I don't think I can put it better than him, but you watch his channel, you'll know what I'm talking about. Thank you so much, Ranjan.
Thank you, Z. Brilliant
Love
as
it.
always.
Love it. Right, we've got one of our favourite people in the property world, Sean. Thank you for taking a few minutes. And he's also brought your children. He's starting the entrepreneur journey early. Anyone following me on social media, they know I'm a big fan. I do the same, because legacy, legacy, legacy. Right, Sean, I've been watching yourself. Right, I'm a fan always. Sean did a massive podcast. You launched some property training, I've seen.
Yes.
And you got some mentees. How's it going?
It's absolutely amazing. I mean, the best thing about having mentees is seeing, the inspiration on their faces when they're like, wow, I didn't know that, or no one's ever told me that before. And there's some people who have even been on master classes, and it's different when you're stuck in a classroom and you're doing your paperwork and you're going, okay, that's what I need to learn, or that's what I need to do. But when you're on a building site, you're asking, what's that? Why is that? How is that? I wouldn't even think to ask that question because I didn't even know it was there. So real life is what I'm saying at the moment,
I think Sean is put in a nutshell. One of the things I noticed with Sean and speaking to him, he understands the ins and outs of actually doing the work, the building. He's been on site and done this, and this is his competitive advantage. So he's showing mentees not only how to get the properties, a property strategy, which he's taken 0 to 10 mil, and counting, is probably higher now, right? Now he's showing how to actually do the work and grow the portfolio. How have you found it from the feedback you've had from your mentees? Because I see them quite inspired.
Yeah.
Is that right?
Well, it speaks for itself. If you look all over the social media, I've even got celebrities on there now as well. Michael Venom Page, a UFC fighter, hangs around with it. 50 Cent, even he's been coming on. We've had some Zoom calls together. He decided to come on site, had a look around, and he's going to come back again when we finish. So, it just speaks for itself. And as I say, look, it doesn't matter where you are in your life, like you're just starting out or you've got some real money coming in, not everybody knows what to do with that money, and it's important to put that money to work as best as possible, because there's inflation eroding your money, there's so many adversities out there, there's so much bad press out there, there's so many things scaring you. So for someone to hold your hand and say, this is what to do, this is how to save your money, this is how to make your money work harder, that's all you need. And when we've been doing it for so long...
On that point, because Sean, like me, loves to talk and give value, and there's so much. When you're getting people who want to go in that property journey, right, because you are inspiring people, and that's why I love talking to entrepreneurs who are inspiring others, because he gives back. I want to know is, how do they get in touch with you, and how do they start or accelerate their property journey? Tell us a little bit.
Really, really simple. DM me renovation or DM me HMO, and then we can take the conversation from there. We can see, are you starting? Are you someone who's been on a course or a mastermind already? What do you want to find out? How can I help bridge the gap and, just get you there? I'm very active. It's very important to be present. It's very important to be approachable. I don't have a PA system where it takes a week to get hold of me. Soon as, you know us, people like us, we work all around the clock. Soon as we see a DM, by the end of that day or 24, 48 hours, we're getting back in touch and say, how can I help you? What do you want from me? And how can we get you that return on investment,
And this is what you need. You need to I always say on these videos, you might see it, invest in knowledge first. That will accelerate your journey. Make sure, being biased here, Sean can back me on this, get a good accountant tax advisor to help you structure the business, and then get your knowledge, get the financing, get people like Sean to help you implement the right strategy that works for you and scale your property business and therefore unlock financial freedom. Thank you, Sean. Thank you again.
Thank you so much. And just before we finish, actually, I wanted to say one last thing. On my last presentation, I did the BRRRA. I called it the BRRRA. And why? Because the A stands for accounting. And I learned the hard way 5-6 years ago about, I made so many mistakes, and it's not about taking one step forward and then 2 steps back. It's about making the right decisions first time. So get your accounting structures right in the first place, and you're going to save yourself a lot of time, money, and effort in the long run. So I really appreciate people like yourself, Z.
Thank you. And likewise, Sean, because the reason being is, if you don't invest in knowledge, and that's end-to-end, and surround yourself with the right people, you're going to potentially not reach the outcomes or objectives, especially in the complex world right now with the issues of costs going up, financing going up, properties all over the place, and you don't know what price you should be paying for them. So I hope you got value. Thank you so much again, Sean. Really appreciate it.
Nice one.
Right, we've got Kilmere here at the Baker Street property meet, and he's going to give us, as you might have seen on some YouTube videos, which we had Akil give us, his great knowledge about financing, because cash still for some people is king or queen, because you need money to grow your property portfolio or be able to refinance. I'm going to get Akil's view on what he thinks the financing world is at the moment. Akil, it's changing a lot. What do you see a lot coming right now, because you see so many entrepreneurs in the property world?
Yeah, I think it's a great question. There's a tale of two sides. We had the first half of the year where we had interest rate rising. I think the second half of the year is now the confidence is being built in the market now. I think we're at the terminal rate of interest rates. I think lenders are more confident in the market where it's playing out now. And what we're seeing on the backside of that, in the Q3 and Q4 going into play, is interest rates coming down. And interest rates in terms of mortgage interest rates are coming down. Wow. So base rate is 5.25% as we stand here in October 2023. There are mortgages available sub 5% at the moment. So for those buy-to-let investors out there, there's availability out there for sub 5%, which is amazing.
Is that due to the financing? People already got the institutions and they've still got cheap financing from historical where they probably had loads, and now they're trying to sell it off. That's why. Because if they went right now on the future cost of financing, that wouldn't be the case, would it?
Yeah, it's a very good point. So yes, so if you own your own balance sheet, the traditional banks will have deposit money, so they can lend out the cheapest methods. But for those specialist lenders that take up institutional funding, that's where you then have a different side of it and how you get funded. So what I would say here is adopt the right lender and have the right lender on your side. We're getting distracted over there, but that's fine.
Yeah, do you know what? This is so important. I don't know what's happening because I don't pay attention. I'm in my own world. And the reason why, getting advice, getting the right people, professionals to help you. One of the key ones, I always go on about accountant tax advisor, I'm biased. But one of the other key people that I always mention is the right financing broker or commercial broker. Because if you don't have someone you've got a relationship, you will struggle because you need to sometimes get third-party finance from a bank or a financial institution. That's where someone like Akil can help you with the journey. Thank you, Akil, for sharing a few words. We've got Andy for his first property, Baker Property Street meet, and he's just talking about how he's setting up his family structure. And I was just saying to him, I mean a family investment company, that you should be thinking about parent companies, subsidiaries, depending on what you're doing. If you're doing the same strategy across the piece, what type of properties have you got right now?
Just a mixture of buy-to-let buy to let, some commercial.
Have you got commercial
shops.
property?
Small
Are any of them
shops.
registered for VAT?
No,
Okay. Are you expecting to register for VAT anytime
No.
soon? Okay. You doing any service accommodation or furnished holiday lets?
No.
Are you wanting to do that in the future?
possibly, yes.
Right, so you need to know there's a difference of VAT treatment. This is what splits the groups up, because normally residential property, the default position is exempt for VAT, so you don't worry about VAT.
Yeah.
But as soon as you start doing commercial property, that's, we have to use the word opted to tax, you need to think about having it separately, otherwise your accountancy and tax will become very complex.
Okay.
Because when you've got VAT and non-VAT. The other little tip for you, as you mentioned, is commercial property has capital allowances. So this is huge. I've just done a video with a Lamborghini about that. So watch that. It's on YouTube, and it gives you why you need to know about capital allowances, because they are your friend and they will save you a huge amount of tax, whether it's income tax if you bought it for an LLP or corporation tax in a company. Look at those, get a financial review done. If you've got a tax specialist on your side, a property accountant tax specialist, they will help you. If you've got any issues, you can always come to us and we'll help you with some queries if that's required. Okay?
Thank you.
Hope that's been useful. Is there any other questions?
No, that's great.
Thank you, Andy. I hope you're enjoying the property meet and
am.
hope you understand the property journey. You've done quite well. You've taken 70 properties at the moment, which sounds like you're highly successful.
Yeah.
This is what property investors should be looking at. I hope you enjoyed that content. We love getting new people on here. Thank you so much, Andy.
Thank you.
Right, it's been a huge event today, the Baker Street Property Meet in October, and now we're finishing it off. Loved it. You're going to see, hope you've seen the whole huge amount of content during the process, and now we're going to be finishing this fun off, and hope you like and comment below about the value you get or any other areas that you want us to cover in accountancy, tax, property, pensions, leverage, whatever you want as an entrepreneur. We always love helping people out on their journey. Thank you so much.